Aloha and welcome to Java. I hope everybody had a wonderful weekend. Today is Monday, May 13th, 2024. So we are looking at some safe asset demand on the rise. And we'll talk about that in a little bit. So let's start with the markets. We've got the MMRI, or favorite risk indicator, hovering around the same level. And we've got our fear greed index is edging back towards the greed. So these are the two drivers psychologically of the market, which is probably close to 90% of what happens with this. It's all about psychology. So fear and greed, fear is the stronger of the two. But right now, edging up, people want to buy. And this is with the relative strength of the dollar and the 10-year yield pulling back a little bit. So we're below 4.5 for that 10-year, and also watching the relative strength of the dollar. So as those both pull back, it's giving more room for stocks. So at the moment, we are looking for a bit of green on the open. So our open will be at least level, neutral to green for the markets. We are looking at producer price index and speakers on Tuesday, not too much today. So all eyes will be on Wednesday's CPI. But in the meantime, with the futures looking green and the stocks looking green, I would expect basically a continuation in the positive direction unless there are some headline news or headwinds of another sort that come in. So with this, watching the calendar, as I said, not too much today. We are looking forward to more tomorrow prior to market open. So if you are a swing trader, you can set up toward the end of the day. So with this, we've also got earnings kind of wrapping up this week, but we'll be watching Home Depot's prior to market open on Tuesday, as well as a few other players in here. Home Depot is a good indicator of the real economy because it's all home improvement, repairs, that type of stuff. So with this, came out. Chinese workers that are paid in digital yuan are rushing to convert it into good old cash because of limited usability. So what they've done is a couple of test provinces. They're rolling out to where government workers and all of them are required to take their payments in the digital yuan. But since it is not widespread or adapted, basically they're just converting it to cash as soon as they can and spending that way. So that's kind of a precursor of how things are going to go with central bank digital currencies when they roll out. So, famous quote, there are three kinds of lies: lies, damned lies, and statistics. So, looking at some of the lies that are running across the boards, we've got the United States administration's chief economic advisor promising relief for the middle class and setting sights on overturning corporate tax cuts. Not going to happen. That's lie number one. Everything is built around lobbying for the political parties, and they have no interest whatsoever in helping the middle class. In fact, the middle class is their anathema. So they're doing everything they can to get rid of it. So lie number two, we've got JP Morgan reporting $760,000 in Spotcoin BTF holdings, ETF holdings. So the CEO, Jamie Dimon, repeatedly has spoken about how Bitcoin is a scam, needs to be shut down. But in the background, they are investing in it. And they are also investing in the asset itself, not just their crummy ETFs. So, lie number three: the US budget deficit shrinks for the first time in 7 months in a fiscal year. Well, maybe shrank in how much it's increasing, but the budget deficit for the United States is increasing exponentially. Aside from the debt service that it cannot take care of at this moment, they are signing more war packages and sending it overseas daily, not to mention the domestic illegal immigration issue that they have. And they've got other things that are coming up as well. So with this, we're going to go abroad for line number four. And this is that the UK exits a brief recession with stronger than forecast growth in the first quarter. So I would like to ask our friends over in the UK, can you tell the recession is over? And did they ever admit that they were in one until maybe last week or the week prior when they had to? So now they're saying they're out of the recession and they have not even dipped their toes, so to speak. So, moving on with companies and jobs, and this will tell a little bit more of the real story. We've got Apple's Maryland star workers. They are going to authorize a strike. So, with this, I'm going to skip down to US Auto Workers Union, seeking a tough victory at the Mercedes plant in Alabama. So, with all of these strikes and the increased wages, you would think they would learn, but we're watching shutdowns in all of the fast food industry in California on these forced increase to the companies for minimum wage. So, the other thing that is going along with this is with these unionized strikes, when they get these increases, the companies cut back. So they'll allow the wage increases, but then they cut the number of people. So the same number of people getting those wage increases must produce more in order to basically evaluate that new wage they are getting, or they're hiring abroad. So this is pushing more jobs out of the United States. So got another story that came across was Air Vanuatu going into liquidation. So they don't have much. They're not a large airline, but they're basically the only ones, so kind of a small monopoly, but they can't make it financially. So it's not as if they don't have captive audience. It's just that the financials are not working. So they're going into liquidation, a lot more mergers, and we'll talk about that with more companies. More banks will be merging and going down as well. So, with this, the only ones that are making it are under subsidies or government spending. So, we've got global chips, which are supposed to be the up and coming sector, and yet they are getting $81 billion in subsidies. So, the big game with Wall Street right now is guessing which company is going to get these subsidies next and try to front run the rest of the market getting into those. So, with AI, artificial intelligence, we've got OpenAI is announcing ChatGPT product improvements on Monday. So expect some movement with them for today. I don't know what they're going to announce or what to expect. However, should be volatile today. In wars and trade wars, when I go into this, we've got China. Their credit is shrinking for the first time. Their loan growth disappointing. So the money base and how they grow these depends upon loans. They must have more loans. So with this contracting, they've got more issues with their economy that are down the road. We've also got them kicking off $1 trillion yuan stimulus bonds. So trying to sell these bonds out now. We're going to see how these go. This can make a difference with the markets as well. More manipulation of the economy, but what is going on is they are trying to manage how the decline, basically. So jumping over to gold, because we were talking about safe haven demand, they're talking about gold demand declining by 50% among economic and geopolitical uncertainty. This is local to Jordan area and Middle East. So the demand is declining because basically a lot of war-torn areas and they can't get in for the purchasing. But globally, demand for gold is increasing. So the real story behind it all. With this, I'd like to bring up the premature ECB rate cut before the Fed has risks. So we spoke about this before. If the European Central Bank cuts first, they're basically weakening the euro. And what that does is that makes everything they import more expensive immediately. They will experience inflation almost immediately. And anything that is imported, just watch that price. It's going to skyrocket. So that includes any food that is imported that isn't grown locally. So be cautious of this because it looks like that is what they're talking about. If you're on the euro, basically, watch for that weakness to come in. So with this, we've got funds going all in, hedge funds this is, going all in on foreign exchange trades driven by all of this central bank drama. So the G10 foreign exchange getting much more interesting. This is by TD Securities, one of the larger hedge funds. So this is the big money. Traders are now betting on a return to more volatile currency markets. And I agree, because as they're doing these rate cuts, we know what will happen with that currency. So again, they're trying to front run it. So another form of that is the government basically putting tariffs. So as they're taxing goods on others, and this is what the current administration US is doing on Chinese products. Basically, they're trying to make those products more expensive than locally to boost local demand. So it's just one more trade war. With this, we've also got Iran is becoming OPEC's second producer of liquid fuels. So they have just overtaken Iraq. Very quietly so, because this is not spoken about in the West at all, that now Iran has become a powerhouse for this. And then going along with this, we've got to look at the writing on the wall down the road. The United States gas surplus will be eliminated before the end of winter. So as they're draining the supplies, what are they going to have to do? Rely on Iran and other countries that they've sanctioned, and they're going to be playing more illegal moves. Well, when they do these, basically it bolsters the economy, in this case, Iran. So we're going to be growing their economy soon. With this, I wish you all a great trading day, wonderful day in general. Thank you all again for joining me here. Please leave a comment. My apologies, I didn't get to a garden plant today, but I was running a bit behind. And I wish you all a wonderful day in general. Thank you for joining again.